All right, good evening, guys. Ken at Tortoise Capital Nightly Strategy Podcast Weekend Edition for Friday night, March 22nd, starting with the 30-minute hybrid swing portfolio. 1-2-3 entry on Alcoa with a scratch. AI, this was a gap and a collapsing dragon, standard risk. This was after the R10 rolled over. We take the skin of the dragon exit here for about half an hour. Caterpillar, that we closed the long from yesterday. It didn't really follow through, took the PSAR exit. It continued to fail. So after the PSAR flip, standard short closed near the end of the day for 2R. Cliff, no trade. CVS, this was a gap up. It peaked at 79.50, rolled back more than a risk box. So I speculated in standard risk. It continued to decay all day and then took the PSAR exit here for about an hour. DIA covered the 2-position long when it gapped and then started selling off. It continued to sell off, so I speculated in standard risk. Took the dragon exit for half an hour. Disney, no trade. Devon Energy took the owl entry short for a scratch. Emerging markets, no trade. Ethereum, no trade. Mexico took a 1-2-3 entry short for about half an hour. Brazil was a big gap down, and when it rolled over below the VWAP, got short. Standard risk 2R exiting near the end of the day. Intel 1-2-3 entry failed for an R loss. IP, no trade. Real estate 1-2-3 short. 1-2-3 cover at the skin of the dragon after the R10 reversed for about 2R. Coke scratched on the short. Regular regional banks. This is a PSAR flip, standard risk, sold off, exited at near the close of the day for about 3R. McDonald's, no trade. Merck, no trade. Microsoft just covered or closed the entry from 2 days ago for about 2R. Marijuana closed the overnight position, started selling off hard. 1-2-3 exit after it crossed the VWAP. Nike, big gap down. It found support, and then a 1-2-3 entry after it crosses the VWAP. Standard risk. It rolled over. The R10 rolled over. It took the exit at the skin of the dragon for about 3R. NVIDIA, emerging dragon for 2R. Clean energy. This was a PSAR flip and collapse for about half an hour. Exited at the skin of the dragon after the R10 reversed. Palantir scratched. Rivian, collapsing dragon short. Preserved about half an hour, maybe a third of an hour. SOUN, no trade. Short was available. SPY was mostly just sideways today, no price action. Tesla, also sideways. Walmart took the collapsing dragon after it crossed the VWAP and the Bollinger Band mean. Standard risk. I didn't want to carry that one over the weekend, so we took an exit near the end of the day for about 2R. US Steel, no trade. And then this was yesterday's last 2 days of XLI where we've been pounding that thing. That's the one I added near the end of the day. It gapped up and then sold off. That's a 1, 2, 3 exit. So that's a great trade. I'm not even going to count it, but that's pretty good. This is a 3-minute sniper trade of the day. This is a PSAR flip, an owl entry short, standard risk to the top of the PSAR, and which is the top of the R10. We get after a reversal of the RL10. Get that. Stand by. So after the R10 rolls over, we take the PSAR flip. This thing runs all the way down. Here's where the R10 reverses. So I take the exit near the skin of the dragon, and that's about 1R. It rolls over. That's a collapsing dragon, standard risk. After the R10 rolls over, I take the exit at the PSAR. Could just as easily have taken the exit here or here or here or here. This was so sideways and quiet, I decided to wait for the PSAR to flip. That's 1R. Collapsing dragon again for 1R. It's now in the afternoon. There's an SSC. I take it when it crosses the Bollinger Band mean. Take that first exit. That's 1R. So that nets out to about 4R, one from each trade. Sniper trade of the day. Quick look at the traders here. This is Ilker. He's got the NYMEX crude. He sees the R10 rolling over. Takes the PSAR flip short. It runs all the way down. It comes back all the way up. So he preserves that much. That's 0.5. This is DIA. He sees that sideways quiet channel. There's your PSAR flip. He gets short. He's taken about a 1 bar of risk. It sells off. It reverses. Here's where the R10 reverses. He takes the exit at the skin of the dragon. He's on 30-minute bar here. So that's about 1.5. So he nets out to 2.0 for the day. Oh, I'm sorry, he's got another one in here. Sorry. It pulls in 1.6, and this is on the regional banks, the collapsing dragon and the PSAR flip, standard risk, and he covers near the end of the day for another 1.6. So that's 3.6 so far, minus 0.8, so he nets 2.8. Oh, there's still another one, so 2.8. That's a good exit. He gives it every chance to make a run. It doesn't. Covers at the or exits at the PSAR for minus 0.8. He scratches the short on, this is on XLI. I like that short, and he doesn't, when it doesn't collapse, he doesn't stick around. So he nets 2.8 for the day. George, I like this one for the stop and reverse. I think you noticed that. This is almost a scratch on IP. This is minus 0.2. That actually pays off if you stop and reverse there. That's a good exit, good effort. Today was just a sideways consolidation mostly. Here's Kevin R. He's working on letting trades run a little bit. Working to widen his stop management system. We talked about that earlier this week. in order to reduce cognitive load. Nice work, nice work, getting paid. This one is a good exit. He tries that as a stop and reverse, good exit, another stop and reverse, which pays. And then a great kata 2 when it crosses the Bollinger Band mean, and it's already below the VWAP. That's great work. And that's 2.9 for the day. So nice work all around. Cover the I'm going to cover the weekend report now. Excuse me. Bullish normal, strongly overbought except for the last 2 days, which gave back a little bit. We remain at 90% exposed in ETF2. The volatility is starting to favor the long side. We are on risk on conditions. That's good. We have a strong bullish trend. We're 13.5% above the 200-day moving average, and the ADX is strong at 26. So all of that is good. The 3-bar or 3 daily per bar, all strong, all good, all-time high, continuing to go. Same with the 9, it left everything behind. This is all good. That was the COVID sell-off, by the way. That's the entire Biden presidency. Pushing all-time highs again. Today was just a consolidation. It did not give back the big run up and the gap up. So this is actually a pretty strong holding kind of a day, even though it closed low. It was such a low range day. That's a market that is actually feeling content. Look at the blended monthly rebalancing portfolios. What worked this week? Tech and Japan recovered. The S&P and mid caps were very good. The Russell and the diamonds were very good. So all US all the time, plus Japan. When you add the XL series, the 9 sector spiders, you get industrials, finance, and tech. All looking pretty good this week and this month. And on the blended performance, to me, XLI is the double secret weapon there. Take a look at some individual stocks. Disney on a rampage. Nice recovery. Caterpillar is dominating. That's helping the strength in XLI. Home Depot and Goldman had good weeks and have more room to go. 3M held up pretty well after a great month. It's still a pretty good week. That's part of XLI. So all that's pretty good. Yeah, so interesting divergence here in the US. You got the large caps blend and tech above average, and then you have the value plays plus all the small caps below average. That's a real shift, a diversification or divergence in the US market. So this is your tech sector. That's XLK and the Qs. This is DIA right here. This is DIA right here. We go to the daily. Start here. Again, just a quiet consolidation day, which means that now you get a chance to see some reasonable auto framers. What stands out is Intel, Johnson and Johnson, and McDonald's for fund managers. Gotta be watching that. Just stabilizing in the ETFs, nothing special. Quite a few squeezes, and the ones that should be attractive to us to get ready for next week. McDonald's, the Qs, Microsoft, Tech, Coke, all of those. The S&P is the number one squeeze at 3.2. That's a market that is poised and ready to go for next week. Still being dominated by the summer and fall. That's positive. Tesla moves back into first position for tradability, but the big three remain the same: Tesla, Tesla, marijuana, and clean energy. The slopes of the Z-scores. Yeah, the 90 is healing as the 30 improves and the 10 all is improving. This is tentatively a pretty good sign that there could be another leg up from here. As hard as that is to believe, that could be true. All right, while we're here, I want to just go ahead and cover, let's see, Joe has some questions for the foundations that I want to get to. Foundations questions regarding the daily pre-market checks. Targeting the top 5 and bottom 5 of the daily movers. Yeah, as based on their performance. If you have what I do is I have 30 symbols that are essentially the Dow 30, but I swap out some of them to put in some of my favorite other symbols, but mostly the Dow 30. And then I have 30 ETFs. That gives me 60 symbols. So I stack those. And at the end of the day, I'm looking for the 5 worst and the 5 best on a percentage basis to be the most likely candidates for big moves tomorrow. If they have big, large directional moves on a percentage basis, then they are in play, and then there's a good chance that tomorrow the momentum maintains. So I take those and I put them on a prep list. Now this is covered extensively in the foundations course, but I take those big movers and put them on the prep list. Then anything that was a traded symbol today could be a continuation trade for tomorrow. So continuation trades. Those go on the list. Anything that is a new swing pattern from one of the mechanical symbols goes on the list. Any of the usual suspects, these are the frog champions like EWW, Mexico, EWZ, Brazil, Devon Energy, Alcoa, Wynn Casinos, any of the things that you see me trading all the time. And then the 3, Tesla, marijuana, clean energy, all of the usual suspects, the ones that are reliably high high value traders, those go on the list. So now I prepare those and I look at the key price levels, high of the day, low of the day. I do standard framing on those. 10-day high, 10-day low. I look at their gap statistic, their range statistic, the R10, so that I can put those markers on the chart and prepare for the opening. Then what I do is, for this prepared list, my priority in the first 30 minutes is to trade between 1 and 3 of the biggest gaps in either direction. And I bracket those orders with an R10 risk box, and I go in either direction, and I take my preference is the ones that have the biggest gaps. But I will also trade other ones on this prep list that break out of that box. And then I do that for the first 30 minutes. After 30 minutes, for the next 2 hours, I'm continuing to trade the 3-minute bars for the ones that are still moving. And now I'm trading the 30-minute bar for all of the other ones that are on the list. And that includes all of the ones that you see me review every night on the hybrid swing. Now, if one of these things that I'm trading on the 30 minutes is really starting to move, then I will drop that down to a 3-minute chart. And then on the 3-minute charts, I can manage 4 positions simultaneously. That's my span of control. So I'm trading all of those symbols on 30 minutes, stalking them, adjusting the position. And that's pretty easy to do because I can evaluate each chart in 5 seconds. And I have about 30 symbols on that list, meaning that in 3 minutes, I can review all of the symbols that are on my hybrid swing portfolio. So those symbols are easy to adjust the stops and make entries. And it'll take another 30 minutes before that thing is even in play again. And meanwhile, I'm trading the 3 minutes up to 4 different positions on the 3 minutes in between the 30-minute pulse. So every 30 minutes, there's a review of those symbols that are on the 30-minute. And then every 3 minutes or so, I'm getting a new bar for up to 4 symbols, and I'm trading those on 3 minutes. Sometimes I exit that, and then I pick one of if there's something moving, I can drop that down into the 3-minute. And that's where the sniper trades of the day come from. Like today, there were very few of those because there wasn't anything moving. So mostly today was monkeying around with the 3-minute bars, or 30-minute bars, excuse me. Yeah, I check all my open swing positions during the day as well, because that's all on 30 minutes. The screenshot of the stock list is literally this. Those are the symbols I'm tracking. I'm tracking the percent changed. It's working reward to risk ratio to the 10-day high. There's the R10 standard risk box, and there's the range stat for what the maximum intraday move of the day is. These other columns are used for establishing swing trading one day at a time, but those are the crucial elements. And I keep this sorted during the day on the basis of which one is moving the most up to the least. And then I always know where SPY is. So in this case, if SPY was going down, I'd be one to concentrating on the things that are suffering the most. But I like to pay attention to the symbols that are at the extremes, because that's where the biggest moves are. If there was something that was getting horribly beat, and then it starts flashing green, it's because they're hitting the bid, then I can maybe check to see if that's turning for a 1, 2, 3. And then I have alerts set for different patterns that I'm interested in, like the SSC and the OWL. That's in the TC 2000 bundle. Yeah, the exit strategies are good because I've been doing it for 30 years. Sniper exits at the VWAP, the 30 MS, SMA, and logical turning points. In the foundations course and in the Q&As, there's about 10 different lectures, all talking about the various exits of the various systems. So I will refer you to those. Most days I'm showing trades on the 30-minute time frames. I start every daily debrief and I write them all the same. The first section is reviewing all of the 30-minute charts for the hybrid swing. And then I show you some sniper trades of the day, which are done on 3-minute bars. And then I show student charts for coaching. And then I review the reports. I just described how I go between 3-minute and 30 minutes during the day. You could kind of think of it this way. The 30-minute is the baseline where I'm tracking those 20 or 30 symbols. And then occasionally one of them pops out to be a sniper trade of the day because it's really moving, and I trade those on 3 minutes. And I can trade up to 4 symbols. What is my criteria for availability? It's the standard list of symbols. And again, there's 4 things that get them on it. It's the standard list of symbols for the hybrid swing. It's continuity trades or continuation trades from today are ready for tomorrow. New swing signals and the usual suspects for frog champions. Those are the only symbols that I trade. Regarding PSAR studies. Yeah, it works well for trending stocks and reversal of trends. That's what we use it for. Now, all of the SSC trades and the collapsing dragon trades start with something that is already in an extreme condition. Like you cannot get an SSC until you have a harsh winter. So that means it's already in a trend, a huge, abnormally large trend to the downside. So now when you get the reversal and the PSAR flips, this thing is in play, and this is either going to recover back to where it started from, or it's going to fail fast and continue that big sell-off. That's covered extensively in the Q&As. So if you don't have the harsh winter, you can't have an SSC or a collapsing dragon. It requires that unambiguous large directional move in order to get things moving. And that's what the OWL entry does as well. That's what keeps you out of the Crocodile River. Let's see. PSAR is often a turning point for stock to go back to the other side of the river. Oh, yeah, that is also true. You can think of the setups like this. Here's your Bollinger Band mean. That's the middle of the river. And then you have plus or minus 1 standard deviation. This is the normal price channel. I'm showing this as sideways, but it could also be kind of directional. And then you have the Z plus or minus 2. Now, what you'll notice is that when you have breakouts from the river, you can get something that goes to Z2 or even beyond and reverses. And then this is where the PSAR is going to flip and you get an SSC. And then the most normal move is a move from Z2 back to Z0, the reversion to the main trade. And because it's in play, it's had 1 and 2 strong directional moves. It's not unusual if that continues on to the edge of the river or even to the edge of the floodplain, in which case you have a 4 standard deviation move. You can make a living going from Z2 to Z2 and getting this middle and trying to get your entries here and exits somewhere around in here. That's it. You need that extreme move away from the Bollinger Band mean in order to create the room to make a big move. Again, that's all covered in the foundations course and the Q&As extensively. That's all I'm going to cover for tonight.